Hello folks, welcome to the Friday trade recap and forecast for the next week. So market is soon closing. I have stopped trading I think around 4 hours ago, so 5 p.m. London time is my cutoff time. So this will be the forecast for the next week. I had 0 trades except NJ, which I covered in the last recap, I believe. So let's start with EU. As always, that's the first one on the radar. So currently we have this sort of a descending. So we have the descending here and then we have reversed to the upside. Basically, currently not getting the momentum I wanted to see. So I was expecting a reversal. Was there a trade opportunity anywhere here? Well, for me, I wasn't seeing absolutely anything. So not really important to cover anything. There was really no entry. But yeah, I expected the price to reverse. It did reverse, but correctively. What does that mean? Broke the high, retrace, broke the high, retrace, broke the high, and is currently possibly continuing, but also possibly retracing. So we shall see. What I want to see on Monday is, of course, a nice push up. In that case, I will look to buy because I'm seeing a clear descending structure. Also, one more thing. So there is smaller descending inside of a larger descending, which is a good sign, definitely. That is a good sign. Price will reverse up. So if I get any buy opportunity, I will know it's high probability since prior price action is telling me market wants to go up. That's not the rule. That just means 70 to 80% of the time, let's say, price goes up after a descending channel. But 20 to 30% of the time, price can reverse or just range around. So basically, if we get a V reversal range, I will look to sell on this leg. That is a common pattern. V reversal, range, push down, classic stuff. We can move on. This one is not really showing me anything interesting. EJ, it was looking really good at one point. So basically, it was looking really good here. It was really heavily ascending. I was not in any long trade, so I know some people got in around here on a buy. For me, it didn't fit my plan. We were just coming into a liquidity area and it was Tuesday. Even if it was the latter part of the week, I would not take it. There was a clear liquidity area above this range, so I was not interested in anything here. But the price did start to ascend. And it was looking very ascending. And I mean, it was a clean ascending structure, basically. Just breaking the highs barely by one candle, wicks, and retracing. I really expected the price to reverse. Unfortunately, I did not get the evidence I wanted. After this break of the high, I wanted to see like a huge move down. I wanted to see like a really large impulse down. We didn't get it. Basically, what happened is, well, we broke the low, retraced, broke the low, retraced again. Here, if some people were looking to sell, I was not. This was no longer a clear reversal structure. Basically, I needed to see a large push, consecutive red candles. This is like retracing in each of these legs. So broke, retraced, leaving wicks, and then only thing going for this trade is this red candle right here. So yeah, too messy price action. This price action was too messy for me to sell. It's not how I wanted to see this pattern. Basically. Price then reversed up and started ranging around. Currently we are ranging right here, so nothing happened out of this really clean pattern. What I was expecting, well, I was expecting to see something like what we saw in January, basically. This huge reversal. Remember this one? I sure do. So you can see just breaking the highs in each of these legs and then a really strong opposite trend. That's what I wanted to see. Unfortunately, we did not get that opportunity. Again, it does not happen every time. 20 to 30% price will range or reverse in the opposite direction. That means it will go to the upside. So basically, right now I am expecting a range inside of the low and the high, like this. And for a trade, I need to see price impulse out. So we know that we have liquidity areas here. what I need to see is basically a large impulse up, and then a flag or a break and they retest, or a large impulse down, flag or a break and they retest. So that's about it. EJ, this pattern is no longer clear. We can ignore it and we can move on to AU. AU is looking the same as EU, basically. So I'm seeing this descending structure. I was expecting a nice uptrend, we didn't get it. After the descending, I definitely expected a nice uptrend. But as you can see, broke the high, printed a huge wick, retraced, broke the high again. Huge wick retraced, broke the high again, and is currently possibly continuing, but may as well retrace. Basically descending into an ascending, so not something I want to see. For a trade, I want to see a large impulse to the upside like this, then an entry pattern. And so same as EU, if it reverses, look for a V, a range, and they push down like this. Moving on, AJ. So for AJ, it's very range bound, extremely range bound. So one thing I can note is liquidity area here. So watch how we react in this area full of stops, I would say. Traders buying here, here. Look at these wicks. Probably placing the stops underneath these most recent lows. So no matter if price goes down or up, you need to be really careful about these areas. Also here, price is definitely very range bound. Out of all this mess, one thing I can spot is a V. Can you see it? So basically it's right here. V and the range, just like we want to see. This is exactly what I want to be seeing. V and a range. If this goes down, if this starts a nice downtrend, any setup that forms here for me will be high probability. So again, I need to follow my plan. The setup needs to look good, but I know it has an extra confluence because I'm seeing a V and I'm seeing a range. Usually after that, what happens? Price starts trending down. Not the rule again. Price can just range around for the next 4 weeks. It's not unlikely to happen. It has happened before. Or price can reverse up. In that case, I'll just look for a pure impulse by itself and an uptrend to start. But yeah, it's always good to know where the price is most likely to go, because then any entry that forms, you know, either has a confluence or doesn't have a confluence of good prior price action. If it goes down, there's an extra confluence of good prior price action. So expecting it to go down. Pound is the same as the other dollar pairs. Descending here. And basically it will, well, it reversed now. Oh, and I forgot. AU. There was an opportunity to enter right here. Let's replay it here. I didn't take it. Why? The only thing going for the trade was that it was in an established trend. So I do classify this as being in an established trend. I am seeing a push down, pullback, and a continuation, but I'm seeing major warning signs. So first warning sign, these huge double wicks. So usually when you see it, you can expect the range. So that's really not that good, but it broke and it continued. So okay. But then printed huge double wicks. On AU, huge double wicks, so I have been backtesting this a lot, and the more that I backtest huge double wicks on AU, the more I expect a reversal at this point. So yeah, huge double wicks. Pullback was small, true. No real shift in momentum, true. But the break was really small too. I mean, just look at this break, just tiny. We can even measure it, so let's see. See the break around 3.3 pips. That's really small. Even it visually looks small. So when I combined all of the confluences and the warning signs, the established trend was not enough to counter these huge double wicks. Huge double wicks. So indecision, these huge double wicks, and the small break. I wanted to see much more. This was definitely not enough for me to take a trade. and it was a loss. So basically it did go down, but then reversed up. So good that I followed my plan. It would have been a 1% loss for me. Okay, so I think we left off at the pound. Okay, the pound, yeah, the pound. Reversing now from the descending channel, but again, printed a huge wick, retraced, another huge wick, retraced, another candle. Let's see if this one continues. As you know, on the pound, I'm looking for momentum, basically large momentum up, flag or a break and they retest, large momentum down, or in this case, as in all of the dollar pairs, a V, a range, and they push down and then like a flag or a break and retest. There was an opportunity on the pound here, right? So this opportunity, well, it had an established trend, so that was really good. You can see push down, breaks the low, retraces just one candle and then continues. But on the pound with the flags, I'm really careful. I'm only taking like really good flags, high probability flags. Major warning sign for me was this momentum shift. So on the flags, I'm really careful because I know most of them lose. So the win rate is really poor with the flags. That's why I just want to keep it as simple as possible and just do the no-brainer setups. After this momentum shift, this was no longer a no-brainer setup, so I wasn't looking for absolutely anything and it would have been a loss. So if you're trading flag formations on the pound, make sure you backtest what kind of flags work out. I'm really careful. I'm still researching the flags, I would say also. So I'm mostly focusing for the pound on the breaks and the retests. This is what I love. This works like really good on the pound, these breaks and retests. Okay, so I'm just looking for a large impulse up or a V range push down. Simple stuff. Currently not seeing much. NJ, oh, heavily range bound. I mean, just stuck in this range, absolutely not showing me anything as a trend trader. This is my worst nightmare. I mean, it's not my worst nightmare because usually after a nice consolidation, we get a nice trend up or a nice trend down. But I'm not taking absolutely any trades when I see this flat price action. So let's see if this move up will continue. Let's see if this will explode up or maybe explode down. What I'm looking for is just price to move away from this structure. I mean, I just need it to break the low with momentum, give me an entry, or break the high with some really nice large momentum. So also liquidity areas below and above, full of stops. So do see how price reacts in these areas. Not so much maybe the top, but here on the bottom, since we are closer to the bottom, I would be really careful. I know a lot of traders bought here, probably sold here, probably sold here on this huge wick. Definitely that's a retail strategy. Find a huge wick and on the red candle you sell it. Basic stuff, basic retail strategy. So I believe they have stops in these areas above and below, and that's why we need to be a bit careful in these areas. So that will be about it. See you guys in the next week on Wednesday. Good luck with your trading. Market is a bit range bound, so looks like we have entered a range bound phase. After a huge month such as we had in January, it's not really something that is strange. Usually after a huge month we get consolidation and ranging price action, so price needs to build up. That's why you see these consolidations. Probably the big players, the market makers, are filling up their positions in this area, and then the price will explode up or explode down. We don't know when, but when it happens, we will take the opportunity to get in on the trend. That's what we do as trend traders. That's it. See you guys in the next video.